Tuesday, April 1st, April Fool's Day. Market analysis, Stan Ehrlich. And I always start out with stock indexes, go to futures, and I got a couple of stocks. Sometimes I do some material with cyclicality cycles. I'm known for the Ehrlich Cycle Finder back in 1977 and a variety of other things. But here we go. So where are we? We have just made new lows in general, not all the indexes, but some of them. Yesterday, into some support, in this particular case, the E-mini, new low, back into support, and almost to a minimum downside objective I have been forecasting for way over a month. And that would be a little bit below, well, about 5,500. So we came close. We almost got oversold also. So I'm not surprised the market's bouncing some. I don't think it's going to go very far on the upside. I don't think it's going to last very long on the upside. And I do think we're going to come back down and get to my minimum downside objective, and maybe even a bit more than that. Depends on the way the market's moving. So small rally, probably got a little bit more life to it. I am not particularly optimistic that it's got a lot. I do not expect it to get above 58.38, which is the rally high a week ago. So we've got a little room to play with on the upside, but during this month of April, I do expect it to challenge and make new lows for the trend down. And that's a general statement for the indexes overall. The 1 minute chart, we popped up, had a high, pulled back, bouncing again. So there's a chance we're going to see another set of new highs for the day, but we're only up about 2 points at the moment, not much. And you translate that to 20 in the E-mini, but 2 in the Spider. So not much. It's not a big up or down day at this point. What's interesting is the fact that it went down quite a bit, then recovered completely and made new highs for the session. And for the last day or two, yeah, one. So I'm not impressed. Let's look at the Spider. Same thing, of course, except the Spider does not have the same trading hours. Remember, as a result, the 23-hour trading session for the E-mini or futures in general, NASDAQ as well, of course, YM, Russell futures, have usually higher highs and lower low and or lower lows for each session, as opposed to their parent symbol that only trades from 6:30 California to 1 o'clock. Smaller ranges in general, but the formations mostly are the same, and the resulting upside downside objectives from patterns that develop are pretty much the same or very, very close. It's the individual idiosyncrasies with the futures contracts relative to the old-fashioned mother contracts, so to speak, with the shorter trading hours. That is sometimes a little tricky to interpolate. So, new lows in the Spider, fine. Close to downside objectives, not quite. Not quite back into a support area, but a little more bounce I can see coming. And looking at the 1 minute chart, not anything to scream bloody murder about. Now let's look at the QQQs. The QQQs did reach my minimum downside objective. The NASDAQ has completed what I talked about, showed you, explained, et cetera, for the last month plus. Basically, since it started to come down from this double and or triple top, it doesn't matter whether you call it a double or triple, the downside objective and the way the formation acts are identical as far as I recall. No differences. All right, so bounce maybe up to the resistance area, which is just already tested on today's high, maybe into it a little bit. But again, I think it's probably going to stop rallying this week. This is only Tuesday rather, and turn back down. Next, we've got the 1 minute chart on the QQQ, not showing anything particularly interesting. Next, we've got the NASDAQ futures, and it did get to the minimum downside objective, surpassed it by a little at the bottom of the support area, basically turned around and almost closed higher yesterday after being down quite a bit. You have to also take into consideration, look at the size of the move down in 1, 2, 3, 4 days. That is quite a bit of a move down, all the way from this high, which was a bearish engulfing, down the next day, big time down the next day, and down the next day, which was yesterday, and finally we're bouncing a little. No big deal. And the 1 minute. The YM, a bit of a different animal, and has only gotten about halfway down to the minimum downside objective. It is a double top, not the best I've ever seen. We did get a great sell signal on the top of the market. That's fantastic. And bouncing off support, rallied, coming down close to support again, bouncing. We just might get stuck here in a bit of a trading range for a short period of time. I'm not sure. This is a tough one for the moment. But today and yesterday's high, about the same, bumping against some resistance. We'll see. I'm not going to go out on a limb here and say something that's going to happen immediately. Again, it could get a little stronger and then turn down to new lows. I think we're going to see new lows. I'm fairly convinced of that. YM 1 minute chart and the Russell did make new lows into a support area, did not quite get oversold. These indexes got extremely close to oversold. None of them actually got there, unfortunately, but it bounced. So I think it's going to be relatively short-term and minor. And the 1 minute Russell. Let's go to bonds. Bonds, brand new last few days, longer, intermediate to longer term chart formations, profound potential results if they work correctly, and so far so good. As a matter of fact, you might remember I was looking for 115.11 for my low, although I was looking for it a couple of weeks ago. Instead, it happened on March 27th, 4 days ago, 3 days ago, and bounced great. Rushed right up. Of course, I got the price almost exactly correct, weeks in advance, within 3 ticks. But my timing was off by about a week and a half or something. I thought it was going to happen earlier, and it happened later. Price is good. Pattern's good. Everything looks good. It's actually coming up much quicker and faster than I thought it would. We have now today made new highs in bonds for the last, looks like about 3 weeks. We are coming very close to a neckline on a head and shoulder bottom formation that looks like an excellent example of one. If we start closing above, let's say 119.10, we will have a break of the neckline of a pattern that started developing for the first shoulder in early November of last year. The head of the formation is a bullish engulfing ER buy signal on the exact low day, January 14th, and I outlined that for you when I saw it. Now, there's a chance that it didn't develop until after my YouTube on that date, so the next day I would mention it. But I might mention that it could happen before it happened on that day. I'm not sure when it actually happened, before, during, after my YouTube, whatever. But there it is on the low day. And on the very far left, we have another one on October 20th of 23. It's October 23, sorry, of 23. Another bullish engulfing ER buy signal, the green bar. This creates a broad double bottom over a year and a half approximately. It's not the best double bottom I've ever seen, but it's close enough in prices with a wide distance between the lows. Has a very, very bullish long-term upside objective. The head and shoulder bottom, which started in November, is close to breaking out. Its upside objective at a minimum for the head and shoulder is 129 almost. But the important thing about that is, if that happens, it will start breaking out of the double bottom formation. The double bottom formation has an upside objective of 145. So this pattern for the last several months is potentially going to pull the trigger on a bigger pattern that's much more bullish. I can say the same thing for 10-year notes. Now, the shoulder should have been a little bit earlier, at least I thought it was going to be. The price level is just fine. I didn't try to peg the price on this one, but it did turn around with bonds as you would expect the same day. Now we've approached the neckline very closely, and the minimum upside objective for the head and shoulder on the notes is 116, a little under 117. This should be a really good move if it works correctly. It'll take months for it to complete, I think, through the summer, and maybe even a hair longer. But I like what I see. Plus, 10-year notes has a much better, more accurate, long-term double bottom formation. The low we saw recently in 10-year notes for just 1 or 2 days was a little bit below the low that it made back in October 23 or 23, with a bullish engulfing at the bottom of the market. Now, unfortunately, we didn't get a bullish engulfing like bonds January 13th. Or was it? Yeah, 14th, it looks like. Nevertheless, double bottom, major, huge bullish objective. I'll talk about again later. Right now, it's not particularly important. It's too far off in time. The head and shoulder, though, neckline, very close. Next, overbought conditions, second day in a row, crude oil testing a significant bear trend line. Let's take a look at that a little bit more. Okay, lower it down just a hair, like that. Okay, that's better. And yep, right across that high. This one tested it. Bearish engulfing sell signal worked great. That broke it, but then again, it went down back below it again. So I don't know that it has much relevance anymore. I probably should delete that thing. Okay, I did. So now, simply overbought, generally in the large support resistance area and or support, but it's in the middle of it, so what the heck. So I think it's close to having a minor upside rally high and pull back a little bit. I haven't got too much more to go on. So I'm looking for a high and turn down. Heating oil, not quite overbought, but very close. Now this is a different story completely. I've rearranged the markings on my chart here a little bit. I think I've added them actually for the first time this morning. This could be a shoulder low that was created on June 4th of last summer. The head of the formation is fairly wide. I know you're supposed to take the lowest low, but in this particular case, you kind of have 3 or 4 lows that are around the same price levels. So I'm going for the middle of it. And it's a very wide head instead of the usual. So I'm looking at that as the head of the formation. And the last shoulder low was made a couple of weeks ago. The neckline slants downward slightly. Everything looks pretty good. My minimum upside objective would be a little over 3.0. Yeah, almost 3.1. We need to get up all the way to 2.4, and we're only at 2.28 in order to have a break of the neckline, which of course is right there. So I like the looks of the pattern. It's pretty good. Let's see how this thing evolves. Could be very bullish. It predicts making new highs for a long period of time. How long? At least a couple of years. I like what I see here. Yep. Okay. Now, a different situation. And I have a little trouble reconciling these energies. Some look like they're going to go down a lot. Some look like they could. And then the heating oil, or what was that? That was heating oil. Yeah. Looks like it's in the process of going up a lot. So they don't jive. Something's going to be wrong. I'll correct it, and they'll align in a general trending situation. Now here, we already had the head and shoulder top in natural gas break out to the downside on March 21, come down slowly. I made a comment about that. Usually it's not slow. It's usually a very fast, sharp, big break for a day or 2 or 3 after the breakout. This was slow. We came back up yesterday punched a little bit above the neckline, which is acceptable, sort of, as long as you close below the neckline, which we did. And now we're back down a lot today. So basically, without getting too fussy about the neckline, we tested it, closed below it, and that should be it. And down we come today. And yes, it's happening exactly like the textbooks tell you. So now the next thing is to break into new low ground below 3.7 and probably get at least halfway down to the objective, maybe even a bit more. But this pattern says it's supposed to go down a little bit below 3.0. Going to take a month. Next, overbought conditions now 4 days in a row in gold. I'm looking for a top. We are currently down on the day after making a higher high when we're overbought. And the minimum upside objective from the pennant formation has been fulfilled. So the pennant worked. I talked to you about that when it started to happen back in mid-January, a couple of months ago almost. So it's topping out in my opinion. We might have a red bearish engulfing if it can get below yesterday's low today. Then it will turn red the moment it ticks below, one tick below yesterday's low, as long as it stays below yesterday's close. After that, after creating a bearish engulfing, the signal's good. I hope. I expect. That's why I developed it. It doesn't work every time, but it works plenty of times for big, big moves. Often, not always. Watch out. I think gold's about to turn down substantially. Silver, last shoulder high, could call it a double top if you wanted. The head of the formation is basically a single high. It's 2 days with the highs being about the same, back on October 22, October 23 of last year. And the first shoulder is similar, May 20th to 24. So this is a pretty big pattern, almost a full year. We are just starting to come down from the last shoulder high. The neckline is all the way down to 31. And the minimum downside objective, I haven't even calculated. Yeah, I did. Okay. Is down to 23.7. Very, very big move down if it works correctly. It's going to take months. Next, platinum. Doji, inside day, dropping off a little bit. Can't really come to much conclusion here. Kind of looks like it's trying to form a pennant formation, sorta. You're between a rock and a hard spot. Pass. Next, high-grade copper, overbought at a previous important high months ago, almost a year ago. Overbought conditions topped out. Classic situation for the most part. Blow off top. I mentioned it at the time. We're a little bit lower on the day, hardly, but a little. It's a doji. Wouldn't be surprised to make new lows yet today, but I am looking for lower levels. First stopping point might be about 4.8. Down to 4.84 or something. A little support. Fairly good support, actually. We'll see what happens after that. Next, we've got an outside trading range today. It is a bullish engulfing today at the moment for soybeans. Yay! I want to see bullish things happen to grains. I'm trying to justify a long-term, major, huge bottom for the grain complex, and it's not necessarily cooperating. But this I like. Bullish engulfings normally are bullish. We're already making new highs for a few weeks. I'd just love to see this thing start to move its way all the way back up toward 1100, 1100. And that would constitute a major upside breakout from a bottom formation that's been developing since August of last year. It could be a very large, relatively flat head and shoulder bottom. You have a couple of weeks sideways trading range in August. You got a lower low in December at the head of the formation. Both of them were oversold, and my shoulder had a bullish engulfing in it just before it started to rally. Now we don't have any signals at the moment, so the shoulder is approximately 3 or 4 weeks in size, 3, 4 to about 326, about 3 weeks in size. And we're moving up and away from that. Looks like it's going to move up some more. I think this could be a very large head and shoulder bottom. The neckline is almost flat at 10, let's call it 1100. Yeah. And then the upside objective would be 1207. Big move. Let's see what happens with this one. Soybean oil. Large rally today. Yay. Coming up very quickly, too fast. We're overbought now and fairly substantially so at 83. So it's probably coming up to this resistance, going to stop and pull back down to a little support and stop and go back up and make new highs again. That should take a couple of weeks, maybe 2 or 3. But if it continues to make those higher highs, I like to see it bust above 49 and a quarter. And then we got the neckline on a head and shoulder bottom that I haven't put the markings in for yet. You got the shoulder probably about May. You got the head of the formation around, I'm sorry. Your first shoulder low is February of 24. The second out of a double head and shoulder, a double shoulder, is the second shoulder, May 7th. And the head of the formation is a single date of August 16th of 24. Then the inside first shoulder with the bullish engulfing at the bottom was December, about Christmas last year. And the secondary last outside shoulder to make it 2 shoulders on the left, 2 shoulders on the right, and a single head is with a bullish engulfing early March. And here it is April 1st. Up you go. First barrier to overcome is still a resistance area that we almost touched at today's high, and I wouldn't be surprised if it still did it. Let's see it make new highs for a couple of months. Then we're looking at a potential major breakout a little bit higher than that. This could be a very bullish longer-term formation in soybean oil, soybean meal. Made new lows for the trend yesterday and is very stubbornly not cooperating. That new low in soybean meal didn't have any bounce back so far. Rallied a little bit yesterday, and now it's slipping back down again. So this is one like in wheat, I believe, is not doing well. Meal and wheat. I need to see them turn around and cooperate with the rest of the grain complex. So meal's got some problems. It could dribble off some more. I don't see it being oversold quite yet. It's close. I don't have any reversals. I don't have any zip pop bang here. I think it'll slip off a little bit more, but the long-term picture still could develop into something bullish. It's not at this moment. Corn, bullish engulfing, March 28th. Told you about it at the time. Yesterday rallied some more. Today rallying even more. Looking good from the reversal standpoint. The reversal is worked. Past tense. We now have plenty of elbow room if you're in the trade to make some money and take a profit. So I need now to close above 477 to get the bigger ball rolling. That would be a minor double bottom breakout to the upside, producing a minimum objective of 512. But that's not the big story. There is a bullish engulfing on February, over a year ago, of 24. I think the first shoulder. We had a head and shoulder bottom from July of last summer, August, and the last shoulder on October that did work completely. And that head and shoulder bottom was by itself containing the head of the larger head and shoulder bottom. Now, there is a double shoulder on the right, but there doesn't have to be a double shoulder on the left. There usually is symmetry, so you get 2 and 2, but not always. So I like the formation. I like the prices. I like the timing. Let's just see it start to work. The last couple of days could be the beginning. Looks like it, including the fact that I got a signal at the bottom. That's what I want. Wheat. Made new lows, oversold condition, bounced back a little bit, not very much. And you're looking at last Friday. Monday, you rallied some. Today, you're up a little bit. I'm not particularly impressed. but at least it's starting to rally out of an oversold condition. And it does have the potentials of having a long-term major bottom. But again, like meal, wheat's just not, coming up with the zip pop bang that I want to see. Cattle got a bottom ER signal on the bottom day, March 4th. I told you at the time. It's been great. Went all the way up to news highs for the trend and then had a bearish engulfing ER sell signal March 21st. Went down a couple of days very nicely, came back, did not, could not, and has not made a higher high for the trend. So my signal is still on the high day. That does not necessarily mean it was a profitable signal. It just means the high of that day where the signal occurred is so far the top of the market. Looks like it probably did make a little bit, but certainly not much. If otherwise it was small loss. Now we're just going sideways here. I wish it would make it close lower than 199 ASAP. Does not seem to be cooperating very well. I'm a little concerned that the signal may not hold up for very much longer, but so far so good. Let's see what happens. I'm voting for down, not quite getting it yet. And hogs. Still kind of between a rock and a hard spot. Don't know what to say about Miss Piggy. I'm just going to have to wait. No comments. I got two stocks. Shell. Yesterday we had an outside up day and an overbought condition, and I keep mentioning this is kind of a weird signal. I don't think anybody else follows this kind of thing. I nicknamed it bass backwards because it looks bullish. It's an outside up day, bullish engulfing. But when you also have overbought conditions, especially substantial ones, all of a sudden it's the exact opposite for me frequently. Now, the last one that happened was on March 20th, and we got one big down day afterwards, but that's all. But it closed a gap and then turned up to new highs, creating another gap. So I'm looking for that gap to be closed, and that's 71.37. But that's not all. I don't think it's going to stay there. I think it's going to go down even lower, come down to another support area. I'll stretch that out a little bit and test that again and break that and go back down a lot more to close this gap at 68.77, 68.82, whatever. That's what I'm looking for. I'm not really getting it yet. Let's close below today's low, which is the same as yesterday's low. That could help a lot. Okay, Apple. Doji, slightly higher. Got a buy signal several days ago that's generally working very well. Looking for higher levels. I wouldn't be surprised to see 130, even in the 140s. Back to the E-mini. Let's see what happened in the last 20 minutes or so. Up a little, down a little bit, sideways, no higher high, no lower lows of any consequence, but it does look a little soft. You guys have a great trading day and profitable trading to you.